From a market perspective, you have to assume outcomes and shift strategies either way. And right now, as you look at the scenario, 2 weeks to go, how are you kind of setting up that investing thesis?
Well, there's always unpredictability. I mean, let's go back to 2016. I think everyone can agree the Trump election was very surprising considering the poll numbers back then. And many people were, kind of caught unprepared for that outcome. Even though the polls this year are looking like Biden and maybe the Democrats are going to sweep the elections, there's still a very high likelihood that that isn't the case, that Republicans defend the Senate or even the presidency. So we believe the best way to be positioned is to not play into the game, to look for the segments of the economy that might do very well regardless of this outcome. The two areas that we have our eye on, first is going to be the Internet of Things. We're seeing great private investment in 5G infrastructure. We just saw the Apple iPhone come out with the 12th iteration. We're seeing a lot of pressure on the Verizons and AT&Ts of the world to upgrade their systems to 5G. That's not going to be affected by political outcomes that much, in our opinion. And secondly, when you look at the healthcare sector, healthcare is always in the middle of government debates. But when you see technology being applied to healthcare, the introduction of telemedicine, the digitalization of healthcare, that is a trend that no matter what happens in terms of protecting the ACA or new policies going forward, we think is going to continue to carry forward into 2021.
Yeah, important. Telemedicine, internet-connected devices, cloud computing. In your view, those are sectors that are going to do just fine, thank you very much, regardless of A, who's in the White House, and B, what party controls the Senate. Because as I said earlier on the program, Jay, everybody that I'm reading and talking to privately says the Senate fight is probably more important from a market's perspective than the White House fight.
I think that's very possible. I mean, the two things to keep an eye on from a investing perspective is going to be what happens to corporate tax rates, because the Tax Cuts and Jobs Act greatly reduced corporate tax rates, which was very beneficial to companies in financials and retail and industrials. But also what's going to happen with heavily regulated sectors like utilities and telecoms and healthcare. So if the Senate stays Republican, you could see a situation that's more like the Obama White House in the second term, where the Senate Republicans try to really kind of prevent the passage of major legislation or regulation. So we could be more of a return to the 2012 scenario that we saw in the past.
Shepard Smith here. Thanks for watching CNBC on YouTube.